Hey everyone, welcome back to Brazil Crypto Report, a podcast produced by Activo Media and Advisory. I'm your host, Aaron Stanley, and today I'm joined by Rodrigo Trindade of Iporanga Ventures. He's the author of some really great research exploring local stablecoin adoption in Brazil and Latin America. So we're going to be exploring that in depth in today's episode. Before we do that, I do want to give a quick shout out to our show sponsors. We have Avenia, which is building seamless infrastructure for cross-border payments in the Americas, and Figment, which provides staking services to more than 1,000 financial institutions globally. We'll be hearing more about them later in the show. Rodrigo, great to have you here.
Hey, Aaron. Thanks for having me. It's a pleasure to be in your show.
Amazing. Yeah, great to have you here. I'd love to start off, why don't you give us a quick introduction to yourself and your work at Iporanga Ventures? And I know you've been working on this local stablecoin stuff for a while now, so I'd love to hear more about why did you decide to go down this particular rabbit hole?
Definitely. So I've been working with Iporanga for the good part of the past 3.5 years, more or less. I came to Iporanga to be the crypto guy here. So to deal and lead everything related to blockchain, or fintech-related blockchain opportunities. So that's basically my role here. I have been doing and leading the research efforts on for the firm for a while now. So we have been producing reports on blockchain, crypto, from Web 2 to Web 3, for instance, reports for a while. But the stablecoin ones were the ones that really took off. So I'm glad to have that on the track record. So a little bit about myself. I am a physicist engineer. I've been doing research for a while, even before crypto, and I've been involved in the fintech and investment, especially in the VC side space, for more than 5 years now. I think it's 6 years or so. So I have been dealing with everything from traditional fintech to fintech and crypto rails, and the more disruptive crypto technologies and endeavors during this period. And why did I start the research? It's a good question. As an investor, I wanted to know how the market was behaving. I mean, sometimes it's hard when you do investment or when you try to do investment to track how the market's going, what are the numbers, is this market really growing, and if it's growing, how fast it is. And looking to Latin America, especially local stablecoins, I couldn't find anything, or at least anything meaningful around the subject. I would go to some crypto associations, on local associations, and hey, do you have these numbers? I want to take a look. And they always answer, hey, we'll have that soon, wait, and we'll provide that for the market. And it never came. So okay, let's do it. If they're not going to provide, I'm going to be the source of information for the market. So that's how everything started.
Oh, amazing. Yeah, sometimes you just got to do it yourself, right? If you want it done right, you got to do it yourself. So maybe tell us, you've created you have a report and also a dashboard that you've created that's tracking a lot of relevant metrics around the types of assets and issuance, and the other various types of on-chain metrics surrounding wallets and activity and minting and burning and all this kind of stuff. Maybe just kind of give us an overview of what did you set out to track exactly? What type of information were you looking for? And then how did you kind of incorporate all that into this platform?
We're tracking on-chain data. It's not real time because I don't think it makes sense to have a daily granularity on the data. So we decided to update it weekly. Because I think it's a time frame in which we can really see the movements on the market. More than that, you lose some stuff. Lesser than that, you're also looking zooming in too much, so you couldn't really make some of the trends. So we are tracking basically transactional information. Which tokens are being transacted with which addresses. We're tracking supply. We're tracking holders and active addresses transacting with these tokens. And something that's a little bit harder to do, but I think there are some super interesting sites coming from that, is the DeFi activity, especially on decentralized exchanges. So we have been mapping TVL, for instance, for local stablecoin pairs, and also volume, transaction volume, and some use case specifically how they're interacting with, for instance, a credit card, smart contract, or things like that. So it has been like a fun experience like tracking that. So yeah, I think it's mostly. I don't know if it answered your question.
Yeah. I mean, so when you're trying to kind of gauge, I think, especially from your perspective, you're looking at this as an investor, right? So you want at least some kind of data to either sort of support or maybe go against your investment thesis, or maybe what folks are pitching you on. You want at least some sort of data to sort of compare that to, be like, okay, is this real or is this just a bunch of nonsense, right, that these people are proposing? So maybe talk a bit about, like, I mean, this is a very nascent world, right? The whole like non-USD stablecoin market, irrespective of where in the world we're talking about, is still very nascent and I think people are still figuring out, like, what are the product market fit angles? What are how do you get enough liquidity to make this stuff worthwhile? And looking at a market that's so nascent like this, how do you kind of go about deciding which metrics are important into maybe informing an investment decision, and maybe how did you incorporate those into the design of this platform?
But it's an interesting question, and it really depends which kind of business model you're looking into. For instance, if you're analyzing like a payment solution or through a payment point of view, it obviously needs to track volume, right? Transacted volume, average transaction size, and for which use cases and for which directions the flows are happening. So I'm really tracking that for payment, for instance. But we have been seeing recently a lot of new solutions on yield-bearing stablecoins. And for those companies, supply is something super interesting because it's where the revenue comes from. So the bigger the supply of the stablecoins, the bigger will be the yield they will be taking and sharing with the ecosystem. So I think everything boils down to which is the most important metric to revenue. Another interesting use case, for instance, I have been tracking this credit card solution that operates with a Uniswap pool. So they have a BRL stablecoin and USD stablecoin pair, in which empowers the FX for the credit card operations. So looking into the swap transactions might give super interesting and insightful information about the operation, how many transactions they're doing. We can estimate, for instance, the take rate in the operation, so we can estimate revenue for these protocols as well. So it really depends on which business model we are interested into looking into. So this is like an overall view. But if you take into consideration and trying to understand how the market's evolving and the maturity, there's other kind of metrics we can track. For instance, the average transaction size is something super interesting, and that has been changing for a while now. So if we segregate the data, for instance, transactions less than $10, $100, $1,000, for instance, we can categorize that as small retail, right? So if we go like from above 10K and less than 100K, it's like a bigger / professional retail, and above that, institutional. It's not a super precise metric, but it works like a proxy, for instance, to understand which kind of operations and which kind of players are doing business using local stablecoins. And it's really interesting to look at the charts and see how, like 2 years ago, the market was dominated from like smaller transactions and higher frequency ones that indicated that like there was like a lot of like bots, arbitrage, and things going on. And right now we have more spaced and in business hours transactions with larger volumes that indicates like the institutions and payments for the real world are happening on chain. And that, of course, together with the qualitative data, interviews, and talk with the experts and play in the ecosystem, we can kind of figure out what's happening with the market from these analysis.
Maybe talk through a bit more of how these use cases have evolved, right? Like, what I know back in the early days of this, you had like BRZ, right, which was I think it was the first Brazilian real peg stablecoin, the Transfero coin. That was really mainly as a way to onboard onto FTX easily, right? That was kind of the main function that served. And then obviously FTX kind of went the way of the dodo. And that, but like the use cases have evolved beyond just on ramping into crypto exchanges or and on and off ramping essentially. And so maybe talk a bit about like how you in your research, like and in the data you found, like what are people like using these things for now, and how has that maybe evolved since, maybe 2-3 years ago? Figment is the leading independent provider of institutional staking infrastructure, with over $18 billion in assets under stake and more than 1,000 clients across Latin America and globally. Banks, exchanges, fintechs, and asset managers can earn secure and compliant rewards on proof-of-stake networks using Figment's non-custodial infrastructure. They offer everything institutions need to stake with confidence: point-and-click staking, real-time portfolio tracking, powerful APIs, audited infrastructure, and industry-leading slashing protection. Head over to figment.io to learn more. I'd like to take a moment to tell you about our show sponsor, Avenia. If you're building a wallet, a crypto consumer app, or a global payment platform, Avenia is your bridge to Latin America. You can instantly connect to PIX, SPAY, and CBU using stablecoins with a single API. No banks, no FX desks, no SWIFT. Head over to avenia.io to learn about how you can move money globally with full compliance and real-time settlement. Now back to the show. And so maybe talk a bit about like how you in your research, like and in the data you found, like what are people like using these things for now, and how has that maybe evolved since, maybe 2-3 years ago?
I think the first finding is that the market has become mainly institutional, or at least for B2B payments operations. So the retail is still there. We still have people using stable coins for on and off ramping. For instance, freelancers working for companies abroad, receiving money and bringing that to Brazil or outside Brazil. So this use case is still happening. They're growing. But most of the volume right now is coming from B2B solutions and B2B applications. So we have been seeing like applications around FX payments and remittances for sure. But we are also seeing things like exchange using local stablecoins as a means of settlement. We have BRL, for instance, that's from the consortium between Mercado Bitcoin, Foxbit, and Bitso, and they're using the stablecoin to settle operations between them. So that's an interesting use case. I've been seeing other interesting use cases, for instance, of like big exchanges that are operating locally. They want to have reserves on local currency, but they don't necessarily want to have that on bank. So having these reserves on local stablecoins is a super interesting way to don't necessarily go off chain to have reserves on local currency. So this is another interesting application. And beyond that, as I mentioned before, I've been seeing card operations using local stablecoins as a means for on and off ramping. And more recently, there's some other use cases arising. For instance, the guys from Crown that they're issuing the BRLV stablecoin or BRLI, depends on the way you look at it. They're really focusing in people doing carry trading. So that's another interesting use case. But to me, the most interesting one and the novel one that's taking shape right now is not super relevant, but I think for 2026 and maybe 2027, we will have significant participation in the market, is using stable coins as a rail for investment in credit and capital markets in Latin America. So they become the perfect rail to intermediate this transaction. So bring money from foreign investors, have that settled in reais for advancement of receivables, for other kind of credit and capital market operation. That's something super interesting that's happening right now. So to me, that those are the most interesting use cases. But again, you have like a lot of different ones. And with the IOF thing that happened recently, we have seen a lot of like usage of local stable coins as well. People trying to avoid to pay like transactional and taxes. So I think there's another interesting use case that people will always find like alternative way to do that, especially when you have crypto on the play, right?
Yeah, well, the IOF thing is interesting, and I just did an episode on this a couple of weeks ago, looking at this whole IOF controversy, right? But I mean, it feels inevitable to me that the government's they're going to get IOF on stablecoins one way or another. It might not happen today or tomorrow, but eventually they will, right? But in the meantime, it's created this loophole where like, oh, hey, if you just use crypto, if you stablecoins, you can avoid the IOF. And while that may not last forever, at least it's having this impact of getting more people to use these assets in the short term, right? So that once they start using them, like, oh wow, this is actually a superior solution. So I think it's bullish just in that effect alone, even if it doesn't last forever.
Yeah, definitely. I've been seeing a lot of people, for instance, like having their first contact with crypto through crypto credit cards. That's something that's really interesting for me right now. And then they're transacting with stablecoin, but then they can realize that they'll be able to do that with Solana, for instance, or with other cryptocurrencies, and then get to the market and increase the penetration overall. So yeah, that's super bullish.
An example that you had mentioned earlier is this idea of like global players maybe holding. They want to hold some local currency as a way of maybe minimizing some FS risk or whatnot compared to USD stable coins. And I was hoping you maybe give us an example of like how that might work, and also maybe on the neobank front too, which you were alluding to with the credit cards, right? These are kind of popping up all over the place in Brazil at the moment. In this we have this sort of window of opportunity where these things are IOF free at the moment, right? But maybe walk us through, just operationally, like how one of these entities would go about using a BRL stablecoin in their either the treasury management process or in their actual operational process of like settling transactions.
It really depends in which use case you're talking about. But something that's super interesting is that local stablecoins, like particularly BRL ones, are already integrated with PIX. So that's a super interesting way to do the on and off ramping. So some people think PIX is like a competitor of stablecoins, but what I have been seeing over here is really it's more an enabler than anything else. So like it's a piece of infrastructure that helps people to have access to local stablecoins. So that's the first step. So usually people are on ramping through PIX, for instance, and these mint stablecoins immediately. And then the business can have access to these local stablecoins. With PIX as this infrastructure rail, local rail, it really enables for a quick in and out of crypto. So a lot of business might be interested in have these reserves so they can be able to pay, for instance, suppliers. They can pay the payroll. So it's one of the basic reasons for people doing that. The other thing I think is having access to yield-bearing stablecoins locally. This is like a super new use case that's like not overall speaking, but at least in BRL perspective, people using yield-bearing stablecoins in order to have not only this liquidity available to meet their needs locally, but also to have interest in yield. Because if you think it doesn't make really sense, if you have like something to pay in BRL to move that USD and be exposed for what, like 5% APY, while you can have 14 APY in BRL. And especially during this year, in which we have seen the real appreciating against the dollar. So it's something that's an interesting use case. But beyond that, I think when the tech evolve, I think everything will be done on chain. So using local stablecoins as a piece of infrastructure. So a small box in the financial stack, so you can build upon credit, you can build upon, for instance, saving products for companies. So this suddenly enables a whole ecosystem of new solutions that might enable players to, for instance, have access to yield, not only in Brazil, but globally. And beyond that, it makes easier to do tax management because people can move the money around and let the money sitting in which geography or at least tax environment is more favorable for the business. So I think this is more or less what I've been seeing so far.
And I want to double click on the yield bearing stablecoin component because I think this seems to be going to be a hot topic in 2026, I think, in the US and elsewhere. And we just did an episode with the guys from Crown who are rolling out a stable coin that's I mean, they have their BRLV stablecoin has native yield baked into the protocol itself, right? So you're getting access to the yield that's being paid on this Brazilian government debt. And as far as I know, that's the first of these assets in Brazil, or tied to the real anyway, that offer this. But do you expect more of these things to pop up maybe in the next year? And would you expect this to be popping up in other markets in the region too? Or is this a play on just the fact that Brazil has such high interest rates right now, so the opportunity is just like too lucrative to pass up?
Yeah, I think, well, first of all, let's do two steps back. I think Crown might be the biggest one right now and the fastest moving on the yield-bearing stablecoins. But Avenia, for instance, and BRZ have been experimenting with this for a while. Avenia, for instance, has a partnership with Picnic in which the users can already have access to yield-bearing stablecoins. They are not, like, at least on my point of view, giving that much focus as Crown is doing to yield-bearing stablecoins. But we have been seeing experiments on that regard for at least a year now before these movements are happening. And I think, yes, Brazil, in the second part of the question, yes, Brazil is a super interesting environment for these kind of applications. We have one of the biggest real interest rates in the world. So it's an opportunity that you cannot pass. But I think we'll see like yield-bearing stablecoins popping up all over. I have been speaking, for instance, with players that are issuing stablecoins on Argentina, Colombia, Chile, and so forth, that are not so representative right now. So that's why they're not on the report. But they're already studying to issuing their own local stablecoins, local yield, because that's what I mentioned before. USD stablecoins are amazing. They're probably the best product that reach like product market fit on crypto, but they have limitations, and they cannot alone create a global integrated market. We need local currencies, and for the system work on chain, we need local stablecoins. So I think yield-bearing stablecoins are just like another step, another building blocks, another building block to create the financial stack we need on chain. So yeah, I think it will be popping up everywhere. I have been seeing players experimenting with it in Argentina, for instance. But soon enough, it will rise in other countries beyond Brazil and Argentina, I think.
It does appear that most of these assets that you're tracking in Brazil anyway, looks like most of these are being issued on Base or Polygon. And I guess my question to you is like, is there anything noteworthy about this, or is that more or less what you were expecting to find? I guess, Base is kind of a hot thing right now. Polygon is one of these things that's, I mean, I think people who aren't necessarily in the weeds on these topics would be kind of surprised to see Polygon as one of the main platforms where these are being issued. But I would love your take on like what's noteworthy about these two platforms being the dominant chains that these assets live on.
Well, I think the reason both Polygon and Base are now leading in the sense of a market cap for local stablecoins in Latin America is basically because of familiarity, right? EVM has been having like a huge traction on Latin America. So if you look into tokenization players, for instance, most of them are doing things on EVM. So I think there was like a good work done around EVM, educating developers and people around that. So naturally, they tend to develop in these technologies. But on my point of view, the underlying blockchain, at the end of the day, doesn't really matter, as long as it's have like a good uptime, cheap transactions, and it's fast, right? So what I have been seeing is players issuing stablecoins where the liquidity or demand are. So if a client wants to have that on Celo, so be it. If a client needs it to on Solana, so be it. So I don't think the underlying tech has like a particular reason beyond those two elements. Like people are used to develop on EVM, and well, there's like good fast transaction options on EVM. But I think what might change this game is liquidity. So if someone is able to create liquidity, deeper liquidity in a specific chain, for instance, that might be attractive for all these players to double down on this specific chain. Because it's become like obvious reason, like right to become cheaper and we enable bigger and more volume transactions in the end of the day. So and the same thing goes for instance, swapping options. Uniswap dominates the market because I think, again, it's a well-known tech. People are familiarized with the smart contract. They had like a first move advantage, and they have some interesting solutions in concentrating liquidity, especially with Uniswap V4. So yeah, I mean, I think that's basically the main reason.
You're also tracking stable coins outside of Brazil in this analysis that in this data dashboard you've created. You're also tracking assets in Colombia and in Mexico. And I guess I would be interested. I realize there's fewer assets in these markets than in Brazil, so you don't necessarily have the same data set to work with per se. But how do you see these markets, or how would you compare these markets and how these assets are being used in these markets, whether it be in terms of just like overall maturity of this ecosystem or just how the assets are being used? What type of infrastructure exists? What are maybe some of the key similarities and differences there?
Yeah, I think the biggest similarity is the use case for FX and remittances overall. This is by far the most relevant use case on local stablecoins right now. So, for instance, if you look into Colombia, we have probably four players issuing stablecoins. If you look into the report, you'll find two. There's another two will be joining the data set soon, but they're not right now because they're not super relevant in terms of volume and supply. But if you take, for instance, Minteo, that issues COP-M, that's the biggest Colombian peso stablecoin. 90% of the volume is related to FX payments. I have been talking with the guys from Intel for a while, and that's basically the use case they have been seeing. And the same thing works for Mexico, right? So when you also look to DeFi activity for these stablecoins, it's always against like a dollar pair. So it's like local stablecoin USDC, local stablecoin DAI, local stablecoin USDT. So most of it's remittance effects right now. But again, as I mentioned, I think in the future the use case will diversify as we build a new financial stack of stablecoins. Stablecoins are the enabler, and we will be seeing 2026 and 2027 new things coming up.
Putting on your venture capitalist thought leader hat here for a second, like how do you see these types of local stable coins changing financial access in the region? And I guess you can answer that in both like the present tense and maybe the future tense as well. Like what are we seeing now versus what do we expect to see in 5 years? But would love to kind of get maybe like the big picture thesis from you on like why this is so important.
Well, right now, again, like taking the risk to sound repetitive, I think it's enabled people to do cheaper and more efficient on and off ramping. So, in an overall sense, it enables for better user experience for users. And also with build bearing stablecoins, you give a new option for the retail to have access to like real world yield easily, safely, and in a envelope that they understand and they're used to. So that's for me the biggest things. Looking into the future, definitely, I think that we'll be building things as credit, as capital markets, as I don't know, like escrow accounts, so we can intermediate transactions. But my real interesting take here is that if you really think about it, you don't necessarily need local stable coins to do all of that. You can do with like USD stable coins and use traditional rails for on and off ramping, go to OTC and so forth. But my vision is we have been building crypto and blockchain technology for a while now. So we have, for instance, automated market makers. We have privacy solutions. We have reputation solutions we building on chain. So relying solely on USD stablecoin, in the end of the day, is coming back to the traditional system. So if we want to keep everything on chain, the FX on chain, we need local stablecoins for that. So I envision a future where we will have increased liquidity in platforms, for instance, as Uniswap, in which we enable faster, more programmable, easier to build solutions with low slippage, for instance, and some interesting yield opportunities for market makers that are doing that professionally today. So I think the vision is in the future, as the financial market moves on chain, local stablecoins will be an essential piece of infrastructure. They will be the bridge between the global markets and the local markets. So that's my hot take, maybe. And another interesting thing is local players are not issuing one stablecoin. For instance, if you take a look and talk with the guy from Albania, they're not only interested in launching stablecoins in Brazil, they're interested in launching stablecoins in Mexico, in Colombia, in other countries as well. So with one single integration, one single API, suddenly you have digital programmable money in multiple countries. So it will become super easier and faster to build solutions in a global or at least in a regional scale. So being able to build with the same code base, with almost the same tech, something in Brazil, Colombia, and Argentina, and board already integrated with local payment system, it's powerful. It's powerful.
Yeah, that's super interesting, and it's a very compelling argument, I think, for players that have an interest in reaching multiple different markets. I mean, that's always one of the headaches of kind of doing business in Latin America, is you have all these different systems that are quite fragmented, you have to integrate with, et cetera. And if there's sort of like a one-click way you can do that, that obviously solves a lot of friction, right? And maybe as a follow-on to that question, or as an add-on, I mean, it does seem that within kind of the mainstream crypto world, if we want to call it that, like the concept of non-USD stable coins doesn't seem to get a whole lot of love, which is kind of partly one of the reasons I like talking about it. I'm always trying to go to these areas, like what are the things that people like aren't talking about that they should be talking about, you know? But it seems like people have kind of like reflexively just dismissed these things because maybe they're not exciting as USD stablecoins. The volumes aren't as eye popping as USD stablecoins. There's still some issues with like liquidity, product market fit, or maybe people think of it as like, oh, it's just remittances and we can solve that with USD coins, no problem. Like, but I guess what would you say to people, who may have this position where they just kind of reflexively dismiss this whole segment of the stablecoin market? Like, what would be your response to them?
Yeah, I've been seeing a lot of the discussions on crypto Twitter recently, right? It's funny, man. I mean, in my point of view, it's almost like mostly rage bait, so people can discuss and then go over the topic. But thinking seriously about this, at least from my point of view, it's like saying no one needs or wants local stable coins. It's the same thing as saying like no one needs local currencies in the end of the day. So people pay things in local currencies. People save in local currencies, of course. In some regions, countries like Argentina, USD stable coins might have like a better appeal on the savings side, or people might want to diversify and have a part of the portfolio on USD stablecoins. But at the end of the day, local stablecoins have the same product market fit as USD or local currency. So like people need to pay in local currency. People need to build upon local currencies. People will take credit, for instance, and credit will move on chain at some point. So we don't want to have like local credit denominated in USD, for instance. That would be a nightmare. So having local stable coins solve all of that. So we need that, of course, as long as the dollar remains the strongest currency, the trade commerce currency, and the global savings currency. Of course, the dollar will remain the strongest stable coin overall. But as we see the market evolving, again, local stable coins have the part on everything, and they have a part on an on-chain and DeFi world. And my point is that if we want to build on-chain financial systems, or financial systems, local stablecoins are mandatory. We cannot do that with only USD stablecoins.
No, it's very well said. And just a couple final questions here to round out. As we think about kind of adoption moving forward, I mean, this was, I was going to ask, like, I was going to frame this as like, what are the biggest barriers to adoption? I'm not even sure if that's the right way to frame it, because I feel like we're almost like so early still that like, are there barriers to adoption? Or are we just like still early in the game where people are just still like learning about what these things even are and what they can do? But we're looking at, kind of regulatory or technical or like user experience, or even just kind of like a product market fit discovery. Like we don't know what we don't know as far as like what these things can actually be good for and what they can be used for and what kind of benefits they can bring. But what do you see as maybe the things that need to be solved for to maybe make these local stablecoins kind of help to, have them fulfill this kind of vision that you're just talking about?
I think transparency is something that we need to solve for. There's some players with better, I don't know if better is the right word, but like a more transparent approach around reserves. So I think we need to increase transparency and reporting capabilities and auditing capabilities for this kind of operations. In the current report, we partnered with the guys from Fact Finance. They're doing proof of reserve for local stablecoins. For instance, they're already working with the guys from Crown. And I think this is like a super important step to have a safer and better environment for the end users and also companies. So I think the transparency side need to evolve. A lot of players already are compliant, like publishing every month new reports, auditor reports on reserves. But I mean, we are in a data world. We're on crypto. Why to have something like monthly? Why not have it real time so people can really know what's happening? So I think this is something that we need to evolve. And my second point is liquidity. We have been seeing a lot of players arising in Latin America as liquidity aggregators, liquidity providers, and so forth. But I think we are not quite there yet. So I think we need to evolve in that sense. And maybe it's too optimistic of my view, or maybe it's my DGen side talking here, but would love to see everything going fully on crypto and FX happening on decentralized exchanges and so forth. I know we have a huge way to go to achieve that, but it's my optimistic and kind of wishful way of seeing. Around UX, I don't think we have huge problems. I mean, we have UX problems, of course. If you use crypto solutions and payment solutions, you will see sometimes, hey, my funds just disappeared from my wallet, and like have 2-3 minutes, where are my funds? And then they suddenly reappear somewhere else. So these small things we need to evolve. But I have been doing some experimentations, for instance, paid bills with crypto. Like 2 months ago, I paid my electric bill with Solana, for instance. And it's a kind of interesting experience. So I think we're getting there on UX, but I think we need to move on those two talks I mentioned before, and also keep pushing the abstraction of all the crypto underlying things that are happening in the background. So yeah, I think that's the main barriers, and I think that's what we need to solve for.
Last question here, but from an investor perspective at Iporanga, like what are you guys most excited about with regards to potential investments in this space? Maybe what's your kind of thesis on this moving ahead, and what types of what types of projects would you be in this category would you be interested in potentially supporting, just in case there's folks out there listening to this who might fit into that profile?
Yeah, that's interesting. And I think I have two takes on that. I mean, two point of views, but in some way they kind of converge. I have two point of views. One of as an investor, and also another one as a consultant. I have been helping people to soft land in Latin America and launching products here. So I have these two different takes to say about that. First of all, thinking about an investor, what's the vision here? Why an investor, at least in Latin America, want to invest in crypto? At least want to have our thesis of financial services. We need to invest on things that will build the infrastructure and the building blocks for the new financial system. So stablecoins definitely are an important layer on that. But what stablecoins really enable is programmability, so you can build like solutions using stablecoins. And the second thing, you enable payments and fast transfers. So stablecoins are solving and mostly solve that. For me, the next steps will be using stablecoins as a rail to connect, for instance, liquidity from abroad to Brazil. And we come back again to the credit because I think credit will be the hottest topic, if not 2026, 2027. Collateralized, uncollateralized, and decollateralized credit. So, in my point of view, we need to have this piece of infrastructure built. Other thing that is like getting attention and will have attention uh, in the next year is yield. Because okay, you solve the payments. What else do people need to have like a bank on chain credit? So we already spoke about that. But yield, people needs to have investment options and yield options on chain. So we have been seeing projects abroad like Ondo Finance tokenizing capital markets, equity markets. We have been seeing uh, players labeling yield on USDC, for instance. And in the local market, we'll be seeing the same thing happening. So people start tokenizing credit and capital markets here, enabling investors to have access to that, enable yield on those cents, and so forth. So for me, it's like probably the next two big things happening in the short, medium term on crypto yield and credit. And at the end of the day, they're both related. And at least this is my VC standpoint. In a consultant standpoint, I think we still need to evolve on the retail side of payments. We have been enabling B2B payments and companies making payments with crypto, but we still have a long way ahead for us to create a seamless experience for people like sending money abroad or paying abroad. As I mentioned before, we have like solutions like Noses Pay with Picnic. We have Cast, for instance, and so forth. There are another like thousands of card issuance players operating, but at least from a point of view, the UX is not quite there yet. So we need to evolve that, and we might be seeing on the retail side this super evolving in the next year. So yeah, I think it's kind of my answer.
Hey, hey, Rodrigo, I really appreciate your time today. This has been a really good conversation. I appreciate all of your insights and all the hard work you've put into this, and you've really done kind of the legwork on not just, I mean, you've kind of done your own research. You've been doing this kind of on behalf of the firm. You've been doing this as a consultant. So you're wearing a number of hats here. And I feel like you've been able to put together a very like kind of holistic point of view of this whole ecosystem and how it's evolving. That's very ahead of the curve, let's say. So congratulations on that. And yeah, we'll put a link to your report and your dashboard in the notes here, so folks can have a look at that. Highly recommend it. It's really, I guess, like the only place you can go to track this stuff at the moment. But
Yeah.
it's like the only and best source of information, right? But like, why don't you? We'll give you the final word here. Any final thoughts? Any other points you want to convey? And then maybe how can folks find you if they want to get in touch?
Thank you for having me. I think it's a super interesting experience to be able to spread the word about Latin America and crypto. I see that we have a lot of potential. We have a lot of talent, a lot of people building super interesting things, and being able to convey that for a broader audience abroad, it's super valuable for me. So thank you, Aaron, for the opportunity, and just like to my final words, maybe it's like I'm super excited on crypto. I'm super excited on crypto becoming the new rail for the financial system. And I have been studying, and I will keep studying this topic and publishing research definitely in the future. So if people want to follow me, you can look for Rodrigo Trindade on LinkedIn, but I'm most active on Twitter. So if you type R0DTR on Twitter, you'll find me, R0DTR. I've been posting daily things, not only on stablecoins, but also in Latin America markets overall, and things I'm building also beyond my VC capacity. It's everything on the Twitter right now. So yeah, that's it. It's a pleasure to be here again.
Amazing. Yeah. No, it's great. Thanks so much, Rodrigo. Appreciate your time. And thanks everyone for watching. And we will see you for the next episode.